Welcome back, folks. It's a bright and sunny morning on Dalal Street, but it looks like it's going to start off well in the red. At least that's what the SGX Nifty is indicating. But so many stocks to talk about. Good numbers coming through from HDFC Bank, and we have Abhishek standing right by to tell us how the numbers look this time. Abhishek, good morning.
Good morning, Sonia. So it's a stellar quarter from HDFC Bank, given the fact that, net interest income growth on a YY basis is perhaps the best in last 13 quarters. And on a sequential basis, it's the best in last 16 quarters. So to start with, NII growth was at 18.9% YOY and about 8.9% sequentially. So the declining trend of net interest margin has been arrested. And for the first time in last 8 quarters, we are seeing a margin uptick for HDFC Bank coming in at 4.1% when compared to 4% in the previous quarter. The core operating profit growth, which had been lagging big time, has grown at 16.6% YOY and about 5.8% sequentially. The asset quality has improved. Gross NPA ratio is at 7-quarter low at about 1.23%. The annualized credit cost is down about 10 basis points sequentially. On the flip side, the CASA growth rate on a YY basis has been below the overall deposit growth for the first time in last 7 quarters. So merger process, that is what management highlighted in the con call, will be 1 quarter ahead of their earlier target. So their earlier target was Q2 FY24. Now it will be done by Q1 FY24. So PNL, both in terms of NI and PAT, is ahead of our poll. Brokerages remain bullish. Target price ranging from as low as 1690 per share to as high as 1950 per share. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Mangalam joins in to tell us about Avenue Supermart. Mangalam, numbers a little disappointing?
Well, the margins were amiss, and that's the headline for Avenue Supermarts this time around. The EBITDA was below street expectations, even as the net profit was higher, but that was largely on account of a 140 crore tax write-back. The revenues, largely in line, mildly better than expected on a consolidated basis, because the company had already given us the standalone revenue for the company in the second quarter update. So just to run you through the numbers, 10,638 crores in terms of a consolidated revenue, mildly above street expectations of just under 10,600 odd crores. EBITDA coming in just shy of 900 crores, so the street was working with a number well upwards of 950 crores, and that is why the margins missed. The numbers came in at 8.4% versus street expectations of 9.1%, and the net profit was higher on account of a tax expense cut of almost 60% year on year. But importantly, the management commentary has not, given much confidence as well, because they're saying that the inflationary stress is more acute at lower price points, and this is something a lot of FMCG companies have been saying to us as well. Footfalls continue to be lower than pre-pandemic levels, and discretionary items in the non-FMCG segment are still not back to pre-COVID levels. Even though they're recovering, they're still not back to pre-COVID levels, and that is something that may cause a bit of a worry. The stock is already 26% off its highs, trading at around 84 times, but DMart has always traded at premium valuations.
Okay, thanks a lot for that. We're also going to watch out for Bajaj Auto this morning. Now, the numbers were good, largely in line with expectations, so there was no problem with last quarter's numbers. In fact, the revenue growth was 16.5%, the EBITDA went up 25%, and the margins have improved as well, 130 basis points on a year-on-year basis on account of the fall that we've seen in raw material costs. Not just that, the domestic motorcycle market share as per SIAM data has improved to 20.7% versus 13.1% last quarter. That's also because last quarter had the chip supply issues on account of the semiconductor shortages, and that has eased now. So optically, this does look like a big jump. The realizations for the company have also improved about 3% on a quarter-on-quarter basis. But the management commentary was a bit on the cautious side. And I think looking ahead, there seems to be no visibility in terms of any volume recovery. They say that they expect only a single-digit retail growth for the festive season for the industry. And that's the reason why a lot of brokerages are still quite cautious on the stock. One of them is Nomura. They've maintained neutral. They've reduced their target price on the stock. They say that the volume growth will continue to face headwinds due to a slower recovery in the domestic market, and exports continue to be a big challenge. So yes, this quarter numbers are good, but going ahead, there are still some headwinds.
Absolutely, and remember, we'll be speaking with the Bajaj Auto management as always at 9:30 in the morning today on their second quarter earnings. Well, Nigel, Shree Cements is the other one, right? Cement was expected to have a tough quarter.
Well,
this one,
absolutely. It was expected to have a tough quarter, particularly Shree Cement as well. And the numbers actually are a miss, particularly in the margin front. We were working with a margin number of close to around 15.1% odd. It's coming at around 13.9%. So let's run you through the broad reasons why exactly that happened. If you look at the headline volumes, well, it appeared it's in line at around 7.45 million tons on. The problem was in the mix because they sold a higher amount of clinker And the second part was non-trade sales as a percentage of their total basket went up to around 21%. So the mix is something that hurt them. And that was reflected in the blended realizations as well. The street was bracing for a contraction of around 5%. Sequentially, the realizations corrected by close to around 9% odd. So that was a bit disappointing. And costs continue to remain elevated. The power and fuel costs, it's in all likelihood, they were sitting on high cost pet coke as well, which is gradually getting exhausted. So that was evident in the cost. And Motilal Oswal, they say on the EBITDA per ton front, well, it's come in at its lowest that you've seen in the last 28 quarters, coming in at only around 700 rupees per ton. So clearly the numbers go down as a bit of a miss. Let's see what the stock does, but it should open up in the red.
Okay, and another stock that perhaps could open up in the red is Tata Elxsi. The numbers are a miss. The growth has slowed down after, I think, over 2 years for the company. Reema's joining in to talk about that as well as L&T Infotech's numbers. Reema, hi, morning.
Hi, morning. So Tata Elxsi was slightly softer than street expectations. So constant currency revenue growth on a quarter-on-quarter basis has increased by 4.7%, but this compares with an average of nearly 7% over the last 4 quarters. Even on a year-on-year basis, revenue growth has come below the 30% mark. The company said growth was impacted by supply-side challenges. They could not address the new deals due to the mid and lack of talent, perhaps at the mid and senior level employees. Margins too declined by 310 basis points on a quarter-on-quarter basis, and the stock is expensive. It trades at 65 times forward multiple, having run up 45% year to date, and this at a time when the Nifty IT index itself is down close to about 30%. Now, L&T Infotech has reported a pretty good quarter, all said and done. There was a revenue beat, very strong revenues, dollar revenue growth 4.6%, constant currency revenue growth at 4.6%. That said, margins were slightly lower than what the street was anticipating. Not too much of a miss, but you would say it's a mixed quarter. The stock, however, trades at expensive valuations at close to about 26 times forward multiple. But L&T Infotech, it's a strong quarter, but will the street punish it for the margin miss given the high valuation remains to be seen. Back to you.
All right, Reema, thank you very much for that. So that's basically tech in focus. Now, ICICI Pru Life has reported a good set of numbers actually. Surabhi is here with details on this one. Surabhi, hi.
ICICI Pru's Q2 results were largely in line with estimates. They saw strong growth in their VNB margins. This was largely led by the VNB growth. The value of new business was up nearly 21% at 621 crores. Their VNB margin saw an expansion of nearly 400 basis points at 31%. Their APE was slightly muted, and it grew only by 1.1% at 2,000 crores, but that was expected. Their persistency also improved across the board. Their 60-month persistency saw a sharp increase of nearly 10%. The embedded value saw a muted growth of just 8.1%, and it was affected by negative MTM. Their solvency remained strong at 200%. So green for ICICI Pru.
Going with green. Thanks a lot for that, Surabhi. Well, let's hop across to Sonal. She's going to run us through some other stocks that are news today. Sonal.
All result-related reactions, Nigel. Let me start with Oberoi Realty, where the pre-sales were really strong, 52% uptick on a sequential basis at a 3-quarter high. It was because one of their projects, that is Worli 360, opened for bookings after 5 quarters, and majority of those sales were aided by that one project. Lease income was stable on a quarter-on-quarter basis. It was up 66% on a YY basis because of a favorable base. Hotel occupancy is also good at 82.7%. But if we look at the balance sheet, net cash flow, they were impacted. They were negative 160 crore rupees, which is the only negative that they've seen in last 12 quarters. This is because their net debt has risen by 460 crores on a quarter-on-quarter basis to 2,000 crore rupees. That is because the company is in an investment phase. Going to Just Dial, where it was a margin dip this time. However, revenue growth was strong, up 32%. EBITDA came in at 17 crores, which is flat on a YY basis. Profits also increased to 52 crores, but margins declined by 200 basis points. Lastly, watching out for Butterfly Gandhimati, where it was a top-down miss. Revenues declined by 5%, EBITDA down 10%, margins down 60 basis points, leading to a profit decline of 1%. Expect that particular one to be in the red today.
Okay, that is a pretty exhaustive, long list of stocks that our entire team has for us. Thanks a lot, folks. We'll do a quick recap in case you missed out on any of them. Stocks with positive news flow. There's HDFC Bank, Bajaj Auto, ICICI Prudential Life and Just Dial. While stocks with negative news flow, there's Shree Cement, Tata Elxsi, L&T Infotech, Oberoi Realty, Avenue Supermarts and Butterfly Gandhimati.